Well, the Palisades fire and the Eaton fire, which have ravaged Los Angeles, they haven't even been contained. And already I've been seeing a lot of chatter about the coming wave of foreclosures that will be the result of this tragedy. I've seen questions about it in the comment sections of my own videos. I've already gotten into a Reddit fight with somebody about the prospect of foreclosures coming down the line. I even got a call from an out-of-state investor who wanted my opinion on what opportunities might be available as a result of these fires. And I mean, there is cause for concern. According to real estate data company Adam, and this report came out December 22nd, 2024, there are only 1,078 homes in foreclosure in LA County and only 56 REOs. An REO is a home that is owned and being sold by a bank. Now, the fires burned down 12,000 structures on Los Angeles's west side and east side. If even a fraction of the owners of those properties go into foreclosure, it could double, triple, even quadruple the number of foreclosures in Los Angeles County. Like I said, the fires haven't even been contained yet. There are something like 80,000 Angelinos who are still unable to get back to their homes inside the evacuation zone. So it is far too early to start predicting numbers and outcomes and the like. But we can say that the most at-risk homeowners are those that don't carry any insurance, because it is hard to get insurance in Los Angeles, and those that are underinsured. That's when you carry homeowners insurance, but not enough to actually cover the cost of the house. So in this video, I'm going to share with you what we do know about Los Angeles's uninsured and underinsured homeowners so that we can at least begin to wrap our head around where we're headed. And after that, I'm going to give actionable advice for anybody who's planning to buy a home in Los Angeles or elsewhere in Southern California within the next year to make sure that they make intelligent buying decisions in this now changing market. I'm Jon Schwartz, California's 1% homebuyer agent. In 2024, I saved my clients $180,000 in agent's fees, and my goal for 2025 is to save my clients $1 million in agent's fees. Be a part of it at jonsch.com. That's JONSCH.com, where you can learn some more and schedule time to speak with me to see if we're a good fit. So check it out at jonsch.com. Again, that's JONSCH.com. And before I dig into things, I just want to make it clear that nothing about this video is meant to minimize or capitalize upon the real tragedy that has hit Los Angeles and the incredible difficult paths ahead for those who are personally affected, especially those who completely lost their homes. Yesterday, my wife and I donated to 2 different GoFundMes of friends of ours who have lost their homes. And then in the evening, we went to a pizza party fundraiser for a nearby school that completely burnt to the ground. However, it is my personal mission to help California homebuyers actually achieve home ownership, and I think this information will be valuable to a lot of people watching. So with that disclaimer out of the way, let's get into it. So first, let's talk about this idea of the uninsured California homeowner. In 2022, a lot of major insurers left California entirely. It is difficult now to find insurance when you're buying a home in California, and we hear all sorts of stories of insurers not renewing plans for California homeowners. But here's an important thing to understand. If a homeowner has a loan, that homeowner has to have insurance. Lenders require that homeowners carry homeowners insurance. Typically, especially if you bought your house in the last 10 or 15 years, the lender has more equity in the property than the homeowner. And of course, lenders don't want their equity to go up in smoke either. So if you have a loan, you have to have insurance. I've helped clients buy a lot of homes in Los Angeles in the last couple of years, and 100% of them who got a loan also had to get insurance. And my one cash buyer also got insurance because generally speaking, most people want homeowners insurance. And any homeowner who may have lost homeowners insurance over the past couple of years, if they had a loan, they were required to find new homeowners insurance. California even provides its own insurer of last resort. It's the California Fair Plan, and it is a state-governed insurance entity that exists to insure homeowners who can't find insurance on the private market. It's certainly not inexpensive, but it's available. And again, the bottom line is if you have a loan on your home, you have to have insurance. So any homeowners in Pacific Palisades or Altadena who are uninsured, therefore must own their homes outright. Now look, I'm not trying to say that you're off the hook from tragedy if you own your home outright. However, you're not going to get foreclosed upon if you don't have a loan. Again, I'm not trying to say it's a good situation to have had your house burned down and not have a loan on it and not have insurance. This is a tragedy. But just to be clear, so everyone understands, those properties will not end up in foreclosure. If nothing else, the owner of that parcel of land can sell the land to one of many hungry developers in Los Angeles who can rebuild it and sell the house they build at a profit. This, of course, raises the question of, well, how much might that pile of dirt in Pacific Palisades or Altadena be worth? And this brings us to our second topic of conversation, which is the idea of the underinsured Los Angeles homeowner. So there's been a lot of talk about Los Angeles homeowners being underinsured, that especially in Pacific Palisades where homes are really expensive, homeowners just don't carry enough insurance to cover the home. For example, I got in an argument on Reddit with someone who was pointing out a case they saw in which someone who owns a $10 million home is only carrying $2 million of insurance. In a situation like that, you're going to have this $8 million shortfall in the amount of money it's going to take to rebuild your home. What option are you going to have except to lose the property to foreclosure? Well, unfortunately, that line of thinking is just simply wrong. It's kind of a simple misunderstanding. Let me lay it out for you. Okay, this is going to be pretty simple, but I pulled up the whiteboard anyway. When you buy a house, you're not just buying a house. You're buying a house and land. In fact, real estate legal nerds like to talk about the bundle of rights you get when you buy said home and land. And that is the right of possession, the right of control, the right of exclusion, the right of enjoyment, and the right of disposition. So when you buy real estate, you're not just buying the structure sitting on the land, you're buying the land as well as the exclusive right to use it, to enjoy it, to keep people off of it, and to sell it to whomever you like. So really the question is, how much is the land under these Pacific Palisades homes worth? And is it possible that a parcel of land could be worth the $8 million difference between a property's $10 million price tag and its $2 million insurance coverage? Because remember, when you buy homeowners insurance, you're insuring the structure, not the land. Dirt doesn't go up in flames. Well, let's try to answer this question together, shall we? All right, so here we are in Pacific Palisades, a home that sold in November of last year. It sold for just over $9 million. It's a 2,823 square foot single-family home with 4 beds and 4 baths. Digging a little deeper, we see that it was built in 1949, and it's on 0.38 acres of land. Not super big. Let's take a look inside. I mean, this is a lovely home. It's not especially updated. You know, I'm looking at these walls and these floors. These have probably been here they might be original to 1949, actually, but they're certainly not new. Oh, and there's a pool, which is beautiful. One thing that's amazing and tragic, this is the home. This home is almost certainly gone now, as is this entire backdrop. And it's also worth noting that if we look at the sale history of this home, we see that it came to market at $8.9 million and then went under contract less than 2 weeks later to sell ultimately at $9,005,000. So this was a hot property. This is what $9 million buys you in Pacific Palisades. A 2,800 square foot home built in 1949 that honestly is kind of dated. I have an idea. Now let's go to Dallas. Oh, look at this beautiful home in Dallas. It sold January 10th, 2025. We'll talk about the price in a moment. It's 5 beds, 3.5 baths, 2,900 square feet. And if we dig down into a little more details, it was built in 1958. It's on 0.37 acres. Let's take a look inside. Very gorgeous home. And again, I would say updated a bit, but maybe those floors are original to when this home was constructed. This is definitely a new kitchen. Not super new, but probably built in the past 20 years. The bathrooms look a little updated, but not, again, super updated. And when we get to the back, we see a pool. What a lovely, lovely home in Dallas, Texas. But here's something that's kind of curious. The price tag is way, way lower. $1,225,000 for this 5-bed, 3.5 bath, 2,900 square foot home in Dallas, Texas. And if we look at the sale history, we see that this was not quite so hot a property. It came to market in October at $1.325 million, had a price drop a little over a month later, went under contract shortly after that, and finally sold at its reduced price. So 2 homes, comparable size, comparable finish, both have a pool, Why are the prices so wildly different? Well, it's because of the land that the houses are sitting on. Now, if I had to guess, I would say the rebuild cost of these homes is definitely under $1 million. $1 million can certainly build you a under 3,000 square foot home anywhere in the country. And neither of these homes is especially architectural or has extremely high-end finishes. The difference between these two homes is that one is sitting on a piece of land worth $7 million, and the other is sitting on a piece of land worth $200,000. So as you're browsing around the internet and you hear stories about Los Angeles homeowners being underinsured, you have to understand they're not underinsured. They're insured for the amount of money that it would take to rebuild their home, because that's what gets insured, the home itself. And the level of insurance that a homeowner gets is the rebuild cost of the home, and some other costs as well. Homeowners insurance usually covers a few tens of thousands of dollars for relocation costs if you need to move out while the home's being rebuilt, as well as additional coverage for personal property, landscaping, exterior structures, etc. And look, not every example is quite so clear-cut. Here's a Pacific Palisades home that sold in December for $8.5 million. And if we look at the pictures, we can see that it is pretty interesting. It has a nice modern architectural aesthetic. And a home like this with these kinds of nice finishes and nice detail work, it's going to cost more than $1 million to rebuild, but probably not more than $2 million. So if the owner of this $8.5 million home is carrying $2 million of insurance, are they underinsured? No, that's what it will cost to rebuild their home. If you ask me, the real thing we need to be afraid of is insurance companies becoming insolvent. I've been hearing that we've probably racked up tens of billions, if not north of $100 billion of damage between the Palisades fire and the Eaton fire. And this is the kind of incident that large insurers, frankly, aren't equipped to survive. And I know there's already been talk in Washington that the incoming president and Republican lawmakers want to put conditions on aid to California, but there's a difference between direct aid to citizens impacted by the fires and bailing out the insurance companies. I have a feeling that a lot of Republicans are going to be a lot more comfortable bailing out insurance companies. Ultimately, we're going to have to see how this plays out in the coming weeks and months as the federal government and insurers begin responding to the devastation that survivors will discover when they're allowed back into their homes. And here's what you can do in the coming months to make sure that you're well protected in this changing market environment. Right now, you are looking at the California Residential Purchase Agreement and Joint Escrow Instructions. And if you buy a home in California, 99 times out of 100, this is the contract you will use. And I would like to draw your attention to the second page of the contract, to this section where we have our contract contingencies. Now, a contingency is like a get out of jail free card. If you have a certain contingency in a contract and that contingency is not met to your satisfaction, you're allowed to cancel the contract without any penalty. And a relatively new contingency in the California contract is right here. It is the insurance contingency. And I'm going to take us down to paragraph 8D, which describes what this contingency is about so that you completely understand it. Here we go. 8D, the insurance contingency. Insurance. This agreement is, as specified in paragraph 3L4, contingent upon buyer's assessment of the availability and approval of the cost for any insurance policy desired under this agreement. I'm going to read that again just so it sinks in. This agreement is contingent upon buyer's assessment of the availability and approval of the cost for any insurance policy desired under this agreement. Now, what this means is, as a California home buyer, if you go into contract on a home and you can't find suitable insurance in the period of days specified in the contract, you're allowed to cancel the contract. So if you are trying to purchase a home, as soon as you get into contract on a home, you need to call insurance brokers as well as call insurance companies directly. I always say start with the insurer who insures your cars and ask them what policy they can write you for that specific home. Some insurance companies won't cover any home in California. Other insurance companies will cover you at a pretty fair rate. Some insurance companies, especially depending on where you are in the state, are going to charge you an arm and a leg. If you can't get insurance, you got to pass on the house. If you can get insurance, but it's way more expensive than you anticipated, at the very least, you can go back to the seller and say, look, there's this heightened unexpected expense. I can't offer the price we agreed upon. I have to offer a little less. Can we negotiate the price down a little? And then hopefully you can find a price that works so that between your mortgage payment and the insurance cost, you can stay within your budget. But this is a new and crucial step to buying a home in California, to making sure that you find that the home is insurable and that the price of the insurance is acceptable to you, and that you do that before removing the insurance contingency. If you are planning to buy a home in California in 2025, right now I'm working on a complete insurance video. It'll be posted here as soon as it's ready. If it's not ready, subscribe and come back later. I'm going to cover everything you need to know about insurance, from the 10,000-foot view of what the heck's going on right now, all the way down to how you can get insurance quotes before you're even in contract, so you can know ahead of time what insurance is going to cost on given properties. Also, check out my 2025 California Homebuyers Guide. It covers everything you need to know to make sure you're making the best decisions when you buy your California home in 2025.